Hello, I'm Tag,
And this is Bob.
and you're listening to Bob and Tag Talk. Before we start the show, I'd like to point out that the topics discussed on Bob and Tag Talk are for informational purposes only. So please don't take this as investment advice. We urge you to do your own research before making any investment. Alright, so we're back with Bob and Tag Talk Season 3. So in the past seasons, we talked a lot about the basics of investing, the rules, what are the different mediums which you can invest. And for this season, we're going to be focusing exclusively on international mutual funds. So let's start off right away. So how can you invest internationally through mutual funds?
So yeah, for mutual funds generally, the basic thing is we don't want to directly invest in stocks. That's why we use mutual funds. And this using the same route, we can also invest in international equities. So, for example, if you want to invest in different countries like US, Europe, or even in like emerging markets like Indonesia, Japan, or any other Australia stocks or something like that, it's very difficult if you want to invest directly.
Right.
So there is no one single provider who provides you access to all these different countries and different stocks in the countries. Generally, the best option is to either go through something like an ETF, a global ETF, or a region-specific ETF, or you can directly go through some kind of targeted mutual fund company that provides us the actual funds.
And there is no direct way for you to just directly go and invest in that stock, right? There is no direct way to do that sitting right here in India.
There is
Okay.
a way, but the thing is, for example, the way of how you want to invest it, there's a lot of legal things that you have to take care of.
Got
So,
it.
for example, let's say you want to invest in US. So you can do it through a lot of the mutual fund companies provides the options there. But what you have to do is you have to open an account in US, and then you have to transfer from your account here to the account there.
Okay.
Sometimes the company itself, the mutual fund app or a company itself provide you an option.
Okay.
But it has a lot of regulations that you cannot invest more than $50,000 or $150,000 in a
Right.
year and things like that.
Okay.
So this comes in an overseas investment and the government rules.
Okay. And so to avoid all of that, there are two different options.
Not
One is-
to avoid, we are trying to simplify. What is the
Got
most
it.
simplest option?
So that one is the ETF's route.
ETF and basically mutual funds. Both are just eventually provided by mutual fund companies.
Okay. So yeah, that is one way to invest internationally. So what do you think are the advantages of investing in these international mutual funds?
So
International stocks through mutual funds.
mutual funds. So the main advantage is first thing is you want to kind of have some kind of a diversification globally.
Okay.
So there is kind of pros and cons that has always been discussed by multiple people. So for example, most of the largest companies, they do their business in multiple countries anyways. So as long as you're invested in them, you are somehow diversified.
Okay.
But there are some specific sectors and specific, every country has some unique technology or something like that.
Right.
So which is something which may be interesting, which may be coming up.
Right.
So you want to invest in those kind of very specific niche areas. For example, you can, just as an example, there are oil and gas companies. There are oil and gas companies in India. There are oil and gas companies overseas. So there's a lot of difference if you want to kind of explore those kind of opportunities. Technology companies are different.
Right. And also, I think Tesla would also be a really good option, right?
Yeah, Tesla in US is one of the largest EV makers. At the same time, they're also ramping up in Europe. They're opening in Germany. So now Tesla is already diversifying in multiple markets. So they will make revenues. But you can take example of automobile makers. Some really Korean automobile makers are and Japanese automobile makers are very huge. They do a lot of sales in emerging markets and countries. So generally, it's very rare to get an exposure to those kind of opportunity to buy those kind of stocks. And something like lifestyle related things, fashion, and then healthcare,
right.
and then something like luxury items. So every country has its own specific area of expertise. Germany is very famous for all automobile related things.
So it makes sense to have a little bit of a hand in all of those things.
So if you want to buy some stocks in some kind of select companies, it's very difficult for a normal person to just buy stocks directly. You have to open multiple accounts. There are multiple rules, regulations, and things like that.
Right. So mutual funds are an easy way to do that. Okay, so diversification is one advantage of investing in international mutual funds. But are there any other advantages?
So the other main advantage is, especially in today's scenario, is like currency hedging.
Okay.
So you can see now that due to the global scenario, economic scenarios, kind of oncoming of recession expected in the next few months. So US dollar has been getting stronger.
Okay.
So the value of all the other European currencies and then lot of Asian currencies is dropping faster.
Right.
So what that means is like if you have, let's say, 500 rupees in Indian currency, and if you're able to import something worth 500 rupees, let's say of any particular commodity, so what the amount you used to import 1 year ago is much higher than now. So but now we are getting much lesser for the same 500 rupees.
Yeah, makes sense.
So the value of our currency is depreciating faster.
Right.
The same way for a lot of European currencies as well.
Okay.
The UK currency is also depreciating faster because of a lot of economic scenarios, government, political scenarios, and so on. But US is kind of currency is stronger because generally the kind of the safe haven currency for most of the other investors and so on. So this, how do we get out of this? What kind of advantage? Let's say if you hold money in dollars, that means like you'll have an advantage as your currency depreciates more later.
Got it.
So unless you want to trade in, directly in dollars, sell, buy dollars and so on, that is one thing that generally people do. But not everyone wants to do that, and it's like you have to have, again, it's a little bit cumbersome, and different apps and different services are there and so on. So the other way is like same way. So even if you invest in offshore companies, the global companies, and who are US based or European based, who have stronger currencies, then that is also a type of currency hedging.
Okay.
So as long as any company that earns in US dollars or who has their market in US dollars that earns more in US dollars, they will have an advantage compared to companies whose market is in Asia or purely Europe or very concentrated in Europe and so on.
All right. Okay. Interesting.
So now let's look into what exactly is a fund of fund. So basically it is just mutual fund. There are global mutual fund houses, just like we have JP Morgan as an asset management company in the US, and we have UK based mutual fund companies, and then European based mutual fund companies. All of them, they are also fund managers. They also invest money in different companies.
Okay.
So they also have mutual funds. So using this fund of funds route, so we are getting an opportunity to invest in global mutual funds.
Got it. Okay.
So one example is like, for example, there is an Indian mutual fund company, just like how you have your Indian mutual funds like Parag Parek or something like Quant mutual funds, Quantum mutual funds, and then Navi and all the new mutual funds that are there. What all these companies have decided to do is they are planning to invest directly in those kind of international mutual funds, which we are not able to directly invest in. So it's kind of an opportunity that they are providing us, and they call this as fund of funds. So basically they are collecting the money from Indian investors and they invest in an international mutual fund. It may be like a specific mutual fund or it may be an ETF. There are different strategies are there, but generally these are termed as fund of funds.
Okay, got it. So using these fund of funds, we obviously get the chance to like invest in international funds. And you mentioned a couple of them. You mentioned Parag Parek. You mentioned what else?
So Parag Parek is a little bit interesting. It's not generally termed as a fund of fund. It's actually a flexi cap, but they do directly invest in Apple, Microsoft, and usually US companies, Google companies. But again, there is a lot of restrictions for them also. So if you do it as a Parag Parek way, so there is kind of a restriction from the government that more than this particular amount you're not supposed to invest in overseas companies. But when you go through the fund of funds route, it is very different. That those restrictions may not apply, or it will be more looser restrictions.
So Parag Parek one is not a fund of funds?
It's a flexi cap fund.
All right. So
flexi cap fund is the one they chose to invest in Microsoft and Google shares.
Okay. So what is an example for a pure fund of fund that we know of?
At least like there's one for PGIM mutual fund. Which invests in one of the European mutual funds.
And they don't have a cap on how much they can invest in and all of that?
There will be regulations and caps, but it will not be as large as, because the thing is the participation depends on the market participation and depends on the fund, how much people are investing in it. So usually those kind of limits are not reached easily in these kind of funds. But when it comes to Parag Parek, a lot of people chose Parag Parek because they have international exposure.
Okay. I have another question then. So all this information about the fund of funds, what they invest in, whatever, where can we find all this information?
So all the mutual funds are actually listed, information is publicly listed in Association of Mutual Funds of India, AMFI. So even if you go through any of the apps that we have, there's something specific called a scheme document.
Okay.
So if you click on the scheme document of any of the existing mutual funds, like we have Tata, we have Navi, we have the newer ones, and we have Kotak, HDFC, the traditional ones. All those scheme documents in their website, they'll provide a actual file called something called a fact sheet.
Okay.
Every month they'll have a fact sheet of what are the total funds they have, what are the different types of funds, what is the category of funds. You can also find it in the website of AMFI. That is also one source of information. This is a regulatory information that they are supposed to provide to all investors. So these are publicly available and easily available. You can just go to the document. The fact sheet is just like what are the different category of funds they have. You can, if you want to see internationally fund of funds, you can go to that section and see what are the different fund of funds that they have, and then and also go into the details, like for this particular fund, what are the companies that they're investing in, what is the global fund they're investing in, and what are the category of different categories, what is the percentage distribution of different countries that fund covers, and so on. A lot of statistics that we generally get in a normal mutual fund.
All right. Okay. So we talked a little bit about the advantages of investing in fund of funds and all of that, because you have global diversification, and you mentioned something called currency hedging. So what could be some of the disadvantages of investing in fund of funds?
So as we already discussed in the previous mutual fund things, something that we are supposed to be aware of is entry load, exit load, expense ratios.
Right.
So since these are international funds, all the percentages of the charges are costing in international dollars. International, basically international, they're local currencies. If it's a UK one, it will be UK pounds. So that means the percentage will always be higher. That is something that we need to be aware of. For example, if we invest in an index fund is the most cheapest one.
Right.
So we can either choose an index fund which is available globally, like S&P 500 index fund, or NASDAQ 100 index fund, or even UK's any of the index funds. Those will be a little bit cheaper. Same way like how we have it in our Indian markets. And if you choose specific mutual funds, their percentage will be much, much higher. So 1.5% for them. When obviously translate to Indian currency, it will appear a lot. So, but the thing is, the percentage is always every global fund will be very different. So you have to be aware of those kind of things.
So there will always be an entry load and exit load.
No, the entry load and exit load is not available for all funds. Some will charge higher. Some will have no charges. Index funds don't have any entry or exit load. ETFs totally don't have it. So only some select strategy, very particular strategy funds. It depends on the fund manager's expertise also. What they are charging and so on. So that they may have an exit load.
And always there will be some sort of an expense ratio associated.
That we have to be aware of what are the different charges there for this fund of funds.
So how about we discuss a particular fund of fund, and we discuss and go through the holdings and see what we find interesting about those.
So one of the funds that I found really interesting to talk about was something called PGIM, Global Opportunity for Equity. Global Equity Opportunities Fund. So this is an PGIM mutual fund is also available. They also provide Indian mutual funds. There's one specific fund called Global Equity Opportunities.
Got it.
Where the global is called PGIM Jensen. I think Jensen is the actual mutual fund provider which they are using, which they are investing in. So that particular fund mainly targets US markets, European markets, and some markets, some top companies in Asia as well.
Fine.
So it depends on the scenario. So these kind of companies, basically their fund managers are probably very, very flexible in that way. They completely change their portfolio every 3 months. Sometimes some of the latest information that we have, the historical information, if you see, there'll be a lot of difference. And fund managers, you can always see in the latest announcements and things like that, why are they changing, why are they changing their strategy, what is the new strategy, and so on. Sometimes we have to be very careful, like what we choose to invest in now may not be there 6 months later, because the economic scenario might have changed. So we have to keep updated on all these latest news and things like that. But as long as we trust the fund advisor, we trust the fund house, those companies, and then we get an analysis like what is their kind of analysis, what are they trying to do, and we understand those. Then we can choose to invest in these kind of opportunities.
All right. So based on the current information that we have,
as of the latest month.
As of the latest month, what do you think are the top holdings that they have?
So top 10 holdings, generally you will find it everywhere.
Okay.
The top 10 holdings will cover up to 50% of the actual fund value.
Got it.
So I think for this particular fund that we are talking about, PGIM, the top 10 holdings currently are software companies, and then fashion companies, and some automobile companies, and then healthcare and lifestyle products.
All right. Okay.
So top companies in the US generally are always, for all mutual funds, is always Tesla, Apple, and Microsoft.
Okay.
Sometimes Google. So some of the software companies. So they are actually trying to, most of the mutual fund houses today are trying to get exposure to these top software companies, stable software companies in US, which are again growth focused. Some of the other company houses may focus on Amazon as well.
Okay.
But it depends. So some see Amazon as a software company, some see Amazon as a retail company.
Oh, okay.
So that kind of a difference, and how the fund manager sees that difference.
All right. Okay.
So but Tesla, Apple, Microsoft, some software companies are the most largest things.
Right.
Because they are well managed, they have a large capital, and they can actually invest, and then revenue streams are much stable. And then when it comes to European companies, this particular fund, PGIM, is actually investing in some really interesting fashion companies like Louis Vuitton, Hermes International, and then they also have some South American companies, like e-commerce companies, and then like Mercado Libre was one, I suppose.
It's an e-commerce.
Yeah, e-commerce side. And then it's basically equivalent of Shopify.
Okay.
So different countries. So they are trying to look into a truly global outlook.
Right.
So looking into Mexican companies, South American companies, or any of the other Australasia companies and so on. And they also invest in like semiconductor companies as well. So they are looking into, usually most of the fund houses invest in Taiwan related semiconductor companies.
Okay.
So, but there are also competitors in Europe and so on. So they also have a lot of exposure to the recent, like Ferrari, and then there are some companies like Eli Lilly. These are the top 10 holdings. Novo Nordisk, they all form the top 10 holdings. But if you compare the top 10 holdings now compared to 3 months or 6 months ago, it was very different. Like Shopify, I think, was part of this particular thing, but they pared down on that particular investment, and so now they are completely going into the strategy of saving their particular, going into dividend giving. The stocks that give good dividends, and then some which are stable, like more stable revenue portfolio, and which are even in a recession, these kind of stocks should perform well. That is the strategy they are going with now. And again, in 6 months and 1 year, it might change. So sometimes it's always better to look at what are the top 10 holdings and what is their strategy and so on.
And keep updating yourself with how they are changing things.
Every quarter at least, you have to see.
And when you were talking about PGIM, Jennison, you mentioned two specific, what are they called? Companies called Eli Lilly and Novo Nordisk. Are they also, what sort of companies are they?
They are healthcare-based companies. So that is very European-specific. Healthcare-based companies, pharmaceuticals also. So so generally, like now the scenario is something like imports are getting costlier and so on. So these kind of companies might have an advantage. Like they'll give stable revenue streams for European countries, from the European countries and so on.
And PGIM also invests in a few luxury brands, right?
Yes.
Okay. And Pernod Ricard is one of them.
Pernod Ricard is like a company that produces wines and champagnes and so on. Mostly they are French-based companies. So they are very well known for all their wines.
So this particular mutual fund, fund of funds, not mutual fund, they have their presence in US, France, and a little bit of other like
Novo Nordisk, I think it's a Netherlands-based company. There's also a company called ASML. I think that's also Netherlands-based. And then Ferrari is based in Italy. So they are covering it different regions of Europe.
Different regions, different sectors.
There are Chinese companies as usual, Brazilian companies, Mercado Libre, that one we talked about. And then some companies in Uruguay, Belgium, and so on.
All right.
So diversification is really interesting to see.
And what is the expense ratio or exit load, entry load for this?
Exit load, entry load is not much, I suppose, but expense ratio is high. As long as we are investing directly, I think it's 1.4% currently. It might be changing.
And then there are other different plans also that you can.
Regular and everything. Regular will always be higher than direct.
The direct plans. All right. Okay. So interesting. So today we talked a little bit about what are fund of funds and how you can invest internationally through mutual funds and what are the advantages, specifically global diversification, currency hedging, and so on. And we also discussed how you can find the information about all of these fund of funds through fact sheets and what information that a fact sheet can provide. So we also discussed how it is important to make sure you keep yourself updated on the fact sheets so that you know how the holdings change and what percentage it differs. And we also saw one of the few disadvantages of investing in fund of funds, which is the entry load, exit load, and the expense ratio most of all, which will always be higher than normal whenever you invest in fund of funds. So yeah, this has been PGIM Jennison Fund House related discussions, and we'll be discussing more such fund houses in the future and what sort of companies, what sort of holdings they have. And yeah, I think that's a good spot to end it there today. Hey, thanks for listening to Bob and Tag Talk. Please consider following us on our Instagram and Facebook pages. We put out weekly summaries of the topics discussed on the podcast. And if you found this episode informative, please like, share, and subscribe.